In this video, we are going to see what happens to the market after US presidential election. So we are going to travel forward in time and find things out. So watch till the very end of the video. In the past year, the automobile sector in India has fell, which affected everyone's life by causing economic fallout. Why do you think it happened? Because let's say since automobile company didn't do well, the company needs to reduce its operating cost. So the easiest way to reduce its cost is by firing some employees. These employees always used their salary to fund their children's education. Now that their salary was stopped, that acts as a hinder to the children's education, which causes a dip in teacher's salary, which the teacher always used to buy his groceries. Now that his salary was cut, he need to cross some things from the groceries. That causes loss in food industry, which creates the snowball effect, which affects all the industries that finally causes the fall down in economy. So anything that happens in America can affect a person living in the small village in India. This is called globalization. That is, we are all interdependent on one another. That is the reason why US presidential election can cause tension in market. So why big hype around the US presidential election? Because every time in the history of US election, the market tends to perform below average for the first 2 years of the period and above average for the last 2 years of this period. So if you don't know, the US president's term is for 4 years. Why do you think this happens? The main reason this happens is because of the new policies implemented into the system and tested, which creates the uncertainty among the investors. So there occurs liquidity of stocks. So there is a huge dip in the prices. But you may ask, why does after 2 years the government revive? Because there is no other way other than getting the economy move up to get the people's trust again and win the next election. So they always use their winning cards at the end of the game. As history states that 86% of time the president was re-elected based on the economic growth of the country in the last year of the president's period. As of now, Trump has the high percentage of winning because of the higher highs in S&P 500 in this year. But it is all based on the past. It is not strict that it must be followed. It is one of the variables that needs to be considered. So my final verdict is, it is not good time to buy Nifty and Sensex as a short-term investment. But it is always good to press all the buttons down there except the dislike button. Now that you have done that, you can take a long-term investment at any time, because as you can see, irrespective of any government change, Nifty and Sensex are always offering a good returns in a longer time frame. To know how much does it give a return for over a period of 30 years, by investing in Nifty and Sensex periodically, click the I button right here. You will be certainly amazed. But be careful, as our RBI governor recently said that there may be more liquidity in the upcoming days, which can cause a huge dip in the prices of index. So wait for the dip and grab an opportunity to invest in the stocks. As Buffett said, buy when people are fearful and sell when people are greedy. The main reasons that can cause a huge dip in the market could be US presidential election or maybe second wave of corona. But it could be anything that can make people fearful, like the rising tension between China and India. We will talk about the post effects of corona in the upcoming video. So click the bell icon to get notified when I upload that video. If you are not familiar about candlestick charts, which we use to analyze the stock market, click right here and watch that clearly to understand how stock market works.